Well, it's been another tortuous week on global markets as the odds of the world's biggest economy defaulting on its debts continues to shorten. So to see how Wall Street finished its white-knuckle ride, it's over to Jane Edwards.
Alan, Wall Street traders spent Friday playing a guessing game over whether a compromise on the debt ceiling could be reached in Washington, and the market seesawed in response to each new headline. By the close of trade, the Dow had dipped by another 1%, capping off the market's worst week in a year. After the close, political leaders edged closer to a deal, with the Republicans managing to get a plan through Congress. It was blocked in the Senate, but at least provides the basis for talks throughout this weekend to reach a compromise, as the political brinkmanship continues. With the world's largest economy on the edge of default and credit downgrade, the fragility of the situation was underlined by US GDP figures. They showed lower than expected growth over the first half of this year, explaining why unemployment has remained stuck around 9%. The uncertainty in Washington caused a renewed appetite for safe assets, with the gold price hitting a record for the third time this week. Looking around the world, the picture was pretty bleak on every major share market. The US, Europe and Australia slumped by 4%, while the UK fell by 2% and Japan by 3%. Now, to bring us up to date with local stocks, here's Tom Elliot.
Well, as you just heard, it was another terrible week on the share market as investors fretted over the US government's inability to do a deal with regards to its debt ceiling. Locally, the news in the retail sector was not good. Coles came out with a worse than expected fourth quarter sales result. As a consequence, the shares of its parent Wesfarmers were sold down over the week. Woolworths didn't fare much better. The company is in dispute with Mitre 10 over its new hardware chain logo. Woolworths shares also sold down. Premier Investments, curiously, was one of the few retail stocks to go up. It did announce early in the week it would be closing 50 stores. That was seen as a positive by the market. Premier Investments up 4%. However, with the other retail stocks, Myer was down, David Jones was down, JB Hi-Fi was down, Harvey Norman was down. Really, the news not particularly good. Turning to banking, and the news doesn't get any better, the big four commercial banks all saw their share prices weaken. And if we turn to investment banks, Macquarie Bank was sold off very heavily. The outlook for Macquarie's earnings not great at the moment. Turning to takeovers, and investors in ConnectEast might be willing to go for a higher takeover offer. Now, the board has recommended a bid at 55 cents a share. However, a couple of shareholders have said that 60 cents could be closer to the mark. Remembering back that Celesta's shareholders recently got a better offer, even though their board had recommended an earlier bid. Turning to the $8, it's gone up quite dramatically this week as confidence in the US dollar ebbs away. This is not good for exporters, steel makers, so we've seen shares in BlueScope Steel, One Steel, and of course Commonwealth Serum Laboratories all get sold off. The gold price hit record highs during the week. You'd think this would be good for Newcrest mining. However, Newcrest shares were also weaker because the high $8 tends to counteract what the gold price is doing. Winner of the week is Drill Search Energy, up 16% after announcing a shale gas deal with British Gas. Loser of the week is Platinum Australia, down 16% after the South African government temporarily shut down the company's mine.